Groceries up 60%. The idea that the purchasing power of your US dollars has declined at 2.5% compounded is hilarious unless you happen to be living on a fixed income, in which case it's treacherous. That's really what I'm talking about. And I'm talking about one more thing, Chris. Gold does well when people are concerned about the maintenance of their purchasing power in US dollars. So think about this. If you are invested in the world's premier savings instrument, the best of the best, the one that everything else is measured against, that's the US 10-year Treasury. If you're getting paid 4.5 in a currency that's declining by 2.5% a year, you're making a 200 basis point or 2% real yield. Not all bad for a riskless asset. If by contrast, you're getting paid 4.5 in a currency where the purchasing power is declining by 7.5%, you're actually losing 3% of your purchasing power every year for 10 years. At the end of that 10-year period, the US government gives you back 60% of the purchasing power that you started out with before you made the investment. A guaranteed loss. That's why gold is doing well. And that's why US dollar savers need to understand the juxtaposition between nominal yields and the declining purchasing power of the dollar. It's critical. I've been through this before, Chris. You're too young. But in the decade of the 70s, the purchasing power of the US dollar declined by 75%. $1,000 in 1980 bought you what $250 would buy you in 1970. Not surprisingly, over that period of time, the gold price increased 30-fold. Now, I'm not suggesting to you that the gold price increases 30-fold from here, because it's already increased 12-fold since the year 2000. But I believe, Chris, that it's likely that the gold price mirrors the decline in the purchasing power of the US dollar.
Yeah, and I agree, especially with many things you said there, but especially when you point out, well, if your yield on the Treasury is 4.5 and inflation 7.5, suppose that's the same thing I was getting at when I said, to at some point, does it become non-functional? Especially, I had to chuckle last week when Trump was in the middle of calling Jerome Powell a numbskull. He mentioned a couple of times, and said inflation's under control, there's no inflation. Yet that's even with the oil price coming down $20 over the past couple months. And still all of the government inflation metrics are still already past the 2% mandate, let alone a real metric, as you mentioned. So go ahead.
Mr. Trump doesn't do budgets well. You know, it's not his long suit. He's aptly suited to being a politician. None of them seem to do budgets. I mean, they get the expenditure part right. The most recent Trump budget lets you know where his real priorities are. He took off the spending cap. He proposed the fourth largest deficit in recorded history, except he backloaded the savings and front-loaded the expenditures, guaranteeing he goes over his budget projections. It's more of the same.
Yeah, that is certainly the case. Although what does seem to be changing, and tying back into your intriguing opening comment about the silver market, in December, it was great. I appreciate you sharing that story again of how during silver squeeze, you cleared out the inventories, New York, Chicago, Boston, as I was reviewing earlier today, all of the piles we could find. Until then, you got accommodated by London and Zurich. So that's 2021. LBMA report comes out a couple months later, I believe in April, saying we were, in their words, weeks away from running out. We've run a deficit since then. And then now the new thing that's happened since we last talked is we've seen this metal come out of London. Now some of it's still in New York, so it's not disappeared, but along with what you said in your opening statement about where you see silver headed, where does all of that leave us at this point now?
It's a function of your sense of time, Chris. If you're asking me the question around the concept of a silver squeeze, Here's the silver squeeze. There is more silver that trades in the futures market by far on a daily basis that is around for good delivery in a quarter. There are some days where the futures market trades 200 times the amount of silver available for good delivery. These things cash settle. It's important to know that. If they don't cash settle, what happens is that the market gets halted, and then the exchange forces a cash settlement at their price. But if you're looking for a place that a silver squeeze takes place, it's in the over-leveraged nature of the futures market.
Yeah.
There are a lot of speculators who require immediate gratification. They carry about a 50-cent move in silver, and they actually believe that there is going to be a physical squeeze in silver that will force the institutions into the market in a big way. That won't happen. The futures exchanges operate in their own interest, in the interest of the dealers. If there is an ugly, ugly, ugly silver squeeze, which I think they could be, they will do what they do with the tin market. They will halt the market and they will cash settle at a level they choose. You mean they'll screw their customers? Of course they will. That doesn't mean that there isn't a boatload of money to be made in the silver business. I've been around this business for a very long time. And a silver bull market is truly a wonderful thing to behold. But don't tell yourself, don't set an artificial timeline. Don't say, oh, for sure it has to happen by Thanksgiving. Why? The silver market doesn't care about your time preference at all. The silver market doesn't care about the stop date, the start date. They don't care. But in my experience, I've been through 3 silver bull markets. The first one was a 30-bagger, and the next 2 were each 10-baggers. Do I really care if it takes 2 years to get there? 3 years to get there? Put any discount you want in terms of the time value of money. Never mind a 10-bagger. A 3-bagger pays you a lot of rent.
Yeah.
And I think it's a probability as opposed to a possibility that we get a silver bull market, a silver breakout.
Yeah, and I certainly agree with what you said about the timing there. And I think fortunately I can say I learned that one back in the teens. So I got a decade. Like I've learned that, the first couple of years before that were a little painful. Although, Rick, we just got the recent silver report, World Silver Survey. They showed 150 to 200 million ounce deficit, depending on if you include ETFs. Something I've been wondering about, let's say that there was some scenario where silver price goes to $50 or $60 in some manner that all the pools of capital and entrepreneurs and mining executives are not thinking, all right, it's going to go back down. But somehow, I don't know what scenario that could be. Let's assume it gets to that level and they think it's going to stay there. How much production do you think could be turned on just by the higher price alone? We'll leave aside the time gap, but
functionally none. Silver mines are a fairly small component to silver production.
Right.
The lowest cost production of silver is as an adjunct of mining for other metals. And it's important to remember in terms of the cost structure that silver miners pay to mine silver, but copper miners don't. They get it effectively for free out of the product stream. The other thing is that we do not now know, and we have never known, what the above ground supplies of silver are. What we do know is that high silver prices that are sustained brings that supply out. If you have a sense of history, you will remember back to the point in time when none other than Warren Buffett, who regards precious metals as pet rocks, bought between 15 and 20% of the world's reported above ground supplies of silver. And that imprimatur caused the silver market to go absolutely crazy. And 8, 9, 12, 15 months, something like that, all of a sudden the market got whacked. And of course, the precious metals guys said, oh, conspiracy, right? The banks or the international Jewish conspiracy or some, trilateral commission. That's not what happened. What happened was that India had a bad harvest or something like that. The silver price doubled in US dollar terms, and the rupee fell by half against the US dollar. So the silver price in Indian terms went up fourfold, and that corresponded to a bad harvest, where the Indian peasantries had a choice between letting their children starve or selling their silver. The point is that the cure for high prices is always high prices. There is a lot of above ground inventory. Nobody knows how big it is. Nobody knows. But one can be assured, particularly if there's weakness in the Indian currency, which seems to be epidemic, it seems to be a continuum, that at some price, some